when I've looked at all the investors of very large reputations, Warren Buffett, Carl Icahn, George Soros, they all only have one thing in common, and it's the exact opposite of what they teach in a business school. It's they make large, concentrated bets where they have a lot of conviction. They're not buying 35 or 40 names and diversifying. I don't know whether you remember, Icahn a few years ago put $5 billion into Apple, and I don't think he was worth more than 10 billion when he did that.
Right.
When I went in to tell Soros that I was going to short 100% of the fund in the British pound against the Deutsche Mark, he looked at me with great disdain because he thought the story was good enough that I should be doing 200%, because it was sort of a once in a generation opportunity.
Right.
So A, they concentrate their holdings. B, concentration, this is very counterintuitive. It really gets your attention. So it actually, in my thinking, decreases your overall risk, because where you tend to be in trouble is if you have 35 or 40 names and you stop paying attention to one. If you have big, massive positions, it has your attention.
Right.
So the way, my favorite quote of all time maybe is Mark Twain, put all your eggs in one basket and watch the basket carefully.
Right.
I tend to think that's what great investors do. The other thing to me is you got to have to know how and when to take a loss.
Right.
I've been in business since 1976 as a money manager. I've never used a stop loss, not once. Dumbest concept I've ever heard. It goes down 15%, I'm automatically out. But
Right.
I've also never hang on to a security if the reason I bought it has changed. And that's when you need to sell. If I buy X security for A, B, C, and D reasons, and those no longer are valid, whether I have a loss or a gain, that stock doesn't know whether you have a loss or a gain. It is not important. Your ego is not what this is about. What this is about is you're making money. So if I have a thesis and it doesn't bear out, which happens often with me, I'm often wrong, just get out and move on. Because I said earlier, if you're using a multi-disciplined approach, you can find something else. There's no reason to hang on to any security where you don't have great conviction in it.
Right. No, absolutely. So along that kind of metric where when you're saying what makes a great investor is kind of the mindset and the approach, what about from kind of the emotional side, like managing the emotions and the psychology?
You just have to be disciplined, and you're constantly fighting your own emotions. Look, I'm not going to lie to you. My first boss had this saying, the higher they go, the cheaper they look. There's something weird, and I know everybody watching this has experienced this, and it doesn't make any sense, but when a security goes up, every bone in your body wants to buy more of it, and when it goes down, you're fighting making yourself not sell it.
Right.
It's just the nature of the beast, and you have to constantly remind yourself why you own that security. And just because it's going down doesn't necessarily mean you should sell it. If it's going down, it definitely means you should reevaluate your thesis, but it doesn't mean you should sell it. And you cannot get crazy when it's going up. One of probably the biggest mistake I ever made in the business, and I knew better. Somebody asked me what I learned from this. I said, nothing, I already knew it. In January of 2000, after riding that tech boom to a T and making billions of dollars in 99, I sold everything out in January, and I had a couple of internal portfolio managers at Soros who didn't sell out, and they had it was a smaller portfolio, but they made 30% after I sold. And I just couldn't stand it anymore. And I'm like watching them make all this money every day. And like for 2 days, I'm like ready to pick up the phone and buy this stuff back. And there's a little devil there, and then the angel, and she's saying, don't do it. And he's saying, buy it. And I pick up the phone and I buy them. I might have missed the top of the dot-com bubble by an hour, I ended up losing $3 billion
Oh,
on that trade alone. I had made more the year before, but $3 billion is a lot of money. And it was all because I got emotional and dropped every tool of discipline I've ever had. And somebody says, well, what did you learn from it? And I just said, I learned nothing. I learned that 25 years ago. So you can talk about not being emotional, but it takes incredible discipline to act on that.
I mean, that's incredible. You said you started in 76, right? And that's 24 years later. You've been going through it for almost a quarter of a century, and it still happened.
Yep.
So it's something I want to just add on to kind of what you just mentioned was the actual approach of investing for yourself. You famously talked about looking at what makes the stock go up and down. What does that mean specifically for yourself when you say what makes the stock go up and down? What does that mean in terms of fundamentals?
It varies from stock to stock.
Right.
Interesting thing about Toggle, they'll find things that I didn't even know move the stock.
Right.
But if it happens over and over again, you figure it's not random. So I'll never forget, I keep going back to my boss in Pittsburgh, but I was an analyst and I analyzed retail. And I'd come in with my earnings estimate on Kmart and my earnings estimate on this company and that, and he says, yeah, but what's going to make the stock go up? And I said, what do you mean? And he says, everybody knows what you just told me. Keep looking. And finally, I came back, I found out at the time, by the way, this has changed since then, if you graphed the change in food and energy prices over top the retail index, it was like clockwork. Retail and food and energy prices go up, retail relative stocks go down. It's not rocket science here. If you take discretionary spending and you increase the cost of it, she's got less money to buy a dress. And I watched that and it worked for 10 or 12 years, and then for some reason it stopped working. But there's an analysis of fundamentals, which I completely endorse, where look at the balance sheet, try and figure out a couple years from now what people are going to think about this company, or the earnings going to be different than they think now, that kind of stuff. But then there's all the weird stuff, like I just mentioned. The beauty of Toggle is it comes up with stuff that sometimes I don't even quite understand. But frankly, I don't care. If the stuff works,
right.
I'm going to go with it. I'm very open-minded. I don't need to totally understand something if I've seen it work over and over again.
Right, absolutely.
But most of these things I understand.
Yeah. So they'd be the equivalent of Toggle finding that relationship you just mentioned, right? The food, energy, and discretionary spending.
Yeah, and the beauty of Toggle is I might get a notice one day that XYZ looks good. Then I can do my fundamentals. Then I can look at the chart. So it's not only a discipline in terms of buying and selling, it can also be an idea generator.
Absolutely. No, that makes a lot of sense. Now, I thought this was a good opportunity to hop into something. I kind of wanted to ask it first, but I figured it'd be better to kind of move it there.
I think I know what's coming. You're young, I can tell by the look on your face, it's crypto.
Yeah, 100% correct.
See, I can predict the future.
Yeah, the Toggle probably gave you the alert, right? This guy's about to ask crypto. I'm not going to ask you to put a price target or anything, but the question, just to throw it out there to get the conversation going, is does Bitcoin have the opportunity to, the thesis is it'll replace 9 trillion of gold, right? Or along those lines, or it'll match it. What is your opinion about that thesis?
So I've evolved on this.
Okay.
If you've done your homework, about 5 or 6 years ago, I said more than once, crypto and Bitcoin are a solution in search of a problem.
Right.
So what the hell are these people all looking for? We already have that. It's called the dollar.
Right.
Okay. So for the first move in Bitcoin, I think it went from $50 to 17,000. I just sat there aghast. And by the way, consistent with our earlier conversation, I wanted to buy it every day it was going up, even though I didn't think much of it. I just couldn't stand the fact that it was going up and I didn't own it. So Fast forward, I never owned it from like $50 to 17,000. Felt like a moron. Then it goes back down to 3,000 again. And then a couple things happen. And this is consistent with the fundamental and then what makes something go up or down. So, solution in search of a problem. I found the problem when we did the CARES Act and Chairman Powell started crossing all sorts of red lines in terms of what the Fed would do and wouldn't do. The problem was Jay Powell and the world central bankers going nuts and making fiat money even more questionable than it had already been when I used to own gold. Then the second thing that happened is I got a call from Paul Jones. And he says to me, do you know that when Bitcoin went from 17,000 to 3,000, 86% of the people that owned it at 17,000 never sold it? Well, this was huge in my mind.
Right.
Here's something with a finite supply. 86% of the owners are religious zealots. I mean, who the hell holds something through 17,000 to 3,000? And it turns out none of them, 86% of the people never sold it. And I had this new central bank craziness phenomena. The other thing that happened, it had been, it had a few more years under its belt. So it goes up to 6,000 in the middle of the last spring. And I go, well, I got to buy some of this just because these kids on the West Coast that are already worth more than I am, and they're going to be making a lot more money than me in the future. For some reason, they're looking at this thing the way I've always looked at gold, which
Right.
is a store of value if I don't trust fiat currencies. And then the thing that Paul told me, and then the fact that it had been around 13 years, it had become a brand.
Right.
So it's funny, I tried to buy 100 million at 6,200. It took me 2 weeks to buy 20 million. I bought it all around 6,500, I think. And I said, this is ridiculous. It takes me 2 weeks. I can buy that much gold in 2 seconds. So like an idiot, I stopped buying it. Next thing I knew, the thing's trading at 36,000. I took my costs and then some out of it. And I still own some of it. My heart's never been in it. I'm a 68-year-old dinosaur, but once it started moving and these institutions started adopting it, I could see the old elephant trying to get through the keyhole and they can't fit through in time. I own this company called Palantir, and I see they announced with their earnings today they're going to start accepting Bitcoin and they may invest it. That's happening all over the place. And this thing is never going to have more than 21 million. It's a fixed supply. So I think because it's a brand, it's been around for 14 years, because of the finite supply, it has sort of won the store of value game. Is it going to beat gold? I don't know. It sure as hell doing a good imitation of it the last year or two. But is it going to beat the other cryptos in terms of digital gold store of value? I would say it's going to be very, very tough to unseat. Then you go to what I call the commerce facilitators, which obviously the lead in smart contracts and that kind of stuff would be Ethereum. There, I'm a little more skeptical of whether they can hold their position. It reminds me a little of MySpace before Facebook came along, or maybe a better analogy, Yahoo before Google came along.
Right.
Google wasn't that much faster than Yahoo, but it didn't need to be. All it needed to be was a little bit faster,
Right.
and the rest is history. And I'm so impressed. One of the ways we've always invested in the private sector is to try and figure out where the engineering kids from Stanford and Brown and MIT, where those kids are going. And so many of them are in love with crypto, and that's where they're going. I'm worried about the talent that's like 23 to 28 years old. Somebody we don't even know who they are yet coming up with a payment system or whatever and unseating. So again, I don't know, but my guess is the winner in the commerce facilitating, I'll call it, whether you want to call it payments or smart contract or whatever we're on, there's a good chance that company hasn't even been in, or that currency hasn't even been invented yet.
Right. Absolutely. So Bitcoin as a store of value, probably safer in the crypto space, but as you mentioned, the computing aspect, there's a lot of potential here to be unseated.
You know, as long as Jay Powell keeps acting like he's been acting, I think gold and Bitcoin seems to be a high beta gold, are going to have the wind behind them.
High beta gold. Never heard that before. That is a fantastic terminology.
Well, it's so fantastic. I'm wondering why the hell I didn't just own Bitcoin 2 years ago instead of just gold.
Absolutely.
And a little Bitcoin.
So just to put the cherry on top of the crypto combo, you mentioned it once earlier. Dogecoin, is it just to you ridiculous, and Elon's involvement in it? Like what is your reaction to all that?
It's just it's like NFTs. It's just a manifestation of the craziest monetary policy in history.
Right.
And I think since there's no limit on supply, I don't really see the utility of this thing. Right now, it's just this wave of money and the greater fool theory. No.
Just a no.
Now, having said that, I wouldn't short it because I don't like putting campfires out with my face. So I just try and pretend Dogecoin doesn't exist.
Right.
I think so little of it, it doesn't even bother me when it goes up.
Right.
When Bitcoin used to go up, I'd go crazy that I didn't own it. When Dogecoin goes up, I just start laughing.